Hello everybody, Ignatius L. Jackson CPA here with another video for you during Financial Literacy Month. So if you don't know, April is Financial Literacy Month, and we want to do a series of videos here to kind of do some either education or refreshers or reminders about a couple things in relation to your finances and your overall financial health and building generational wealth and all that good stuff. So far we've talked about a couple different things, compound interest. We looked at some business stuff as well. Now we want to kind of get into your FICO scores, okay? So today's topic is going to be about FICO scores, credit scores, importance of credit, all that good stuff. So stick around, subscribe, like, all that good stuff, and we are going to hop right in here after a second. Welcome back, everybody, to another wonderful episode. So what we're going to talk about today are credit scores. And as a reminder, during the month of April, the more you watch the videos, subscribe, like, etc., the better chance you have of winning some awesome prizes. So we're giving away 2 tax returns, as I mentioned in the earlier video, maximum value of $1,000 per return. And it's only one return that's going to be given away for 2 different people. Okay, and then we're also going to give away 2 Amazon gift cards. So definitely check in, stay tuned, listen in, all that good stuff, so you get potentially some free goodies. Okay, so here's what we're going to do. All right, let's talk about credit scores. All right, so one of the best sources to talk about your credit score is going to be a place called myfico.com. All right, they have a great education center on their website. And they're actually the company that actually creates most of the FICO scores that are used out there. There's a couple other credit scores that are used, some different types of credit scores and things of that nature. But usually when you're applying for like credit cards, mortgages, car loans, stuff like that, they're generally using your FICO score to rate your credit, okay? But there are some places that use different scores. So we're gonna go with this one just because it's the most popular. And plus the topics or the components of the credit score are going to be relevant regardless of what type of credit scoring agency is doing it. But the individual importance of each one could change depending on who's doing that credit scoring. Okay, so since this is the most widely used, we figured let's talk about this one. Now, in terms of your FICO score, obviously it's very important, okay? Because it allows you to go out there and get credit on certain things, allows you to buy a house, allows you to invest in real estate in some cases if you're doing investing from an investor perspective. If you're doing personal guarantees, things like that. It also allows you to go and get credit cards so you can have some emergency financial cash on hand. We're going to talk about credit cards in probably another video, but it is an essential component of financial health. In my opinion, if you use them right, okay? Credit cards are good if you use them correctly, meaning you don't really carry balance, or if you do, it's a 0 interest rate balance to where you're not paying interest every month, and then you get it paid off before it actually starts to incur interest. So there's definitely different ways that you can utilize credit cards to benefit you, especially if they're paying you back some rewards points and things of that nature. So we're going to talk about that a little bit in probably another video, but just wanted to kind of bring that up in terms of why we wanted to touch on credit scores, because they are an important component of everyday life. They even impact apartments. When you go look for apartments, they're looking at your credit score. Jobs, they're looking at credit scores as well to see kind of how you treat stuff financially. So not all jobs do, but there are certain jobs where, especially if you're in a financial job or something like that, where they're going to look at your credit score potentially to see how you actually treat your finances. So they want to make sure you're doing stuff the right way. All right, so very important topics. Let's dive in and take a look at the MyFICO website. And again, this is completely free. You don't have to be a subscriber to use this site, okay? You can if you want to, but it's not a requirement. Here we go, myfico.com. All right, now this is not a plug for myfico.com or anything like that. There's other resources out there that you can use This again is just, to me, one of the most relevant sites that are available for personal credit scores, just because of the fact that these typically will match what I see when I go out there and apply for credit for my stuff. It usually matches exactly what these guys are showing. So it gives you the best information about it. So up to you though, you can, if you want to subscribe, if not, don't need to. This is the important thing up here, this box that says education, okay? We're gonna click on this education box. When we click on this box, look at all this free information. Again, you do not have to be a subscriber to access this information. This is just free information that's kind of there and available for you. You know, budgeting tips, what is a FICO score? It goes through all these videos and things of that nature to kind of educate you. But we're going to touch on one of these here, right here, how scores are calculated. Bam. This is how your credit score is calculated, okay? So this essentially says the most important component of your credit score is payment history. As you can see, 35% of your score, payment history related, okay? The second most important is the amount that you owe, okay? We're gonna explain what these two things mean. So 65% of your credit score is based on payment history and the amounts that you owe, okay? Payment history. The important thing about payment history is any missed payments, any collections, any payments that are like 30 days, 60 days, 90 days old, the older the payments, the worse they are. And so you want to make sure that you're not missing payments more than 30 days. Now, it's a common misconception that people have that if you miss a payment, it gets negatively reported to your credit bureau. That's not entirely correct unless you don't pay it for a total of at least 30 days. That's when they start to get reported to the credit bureaus, is when you miss your payment by more than 30 days. So let's say you have a credit card payment that's due on the 20th of April, for example, and you don't pay it until April 31st, as an example. You might get charged a late fee by the credit card company, but you likely will not have an impact, a negative impact on your credit score. Now, that said, internally within that credit card company, they see all that information and they will know that you pay your payments late. And if you try to get additional credit from them, or they could reduce your credit or even cancel your account because of that, okay? Even though it's not publicly available to everyone else, your FICO score is publicly available to anybody who has authorization to access it, okay? When I say publicly available, I mean you gave them permission to access it. Anybody you apply for credit with can go in there and then see all your history through that. Whereas if you go and you are applying at a particular bank, they're gonna show that history for you at that particular bank. So even though it may not negatively impact your credit score because you didn't hit that 30-day mark, it could impact your relationship with that particular bank or lender in terms of making payments past the actual due date, okay? But very important to try your very, very hardest not to pay something past 30 days past the due date, okay? If the due date's on the 20th, make sure you pay it by 30 days from that date, okay? And you have to be careful because it's not exactly gonna be May 20th potentially, because some months have 30 days, some months have 31 days, some months have 29 days. So you have to kind of make sure you're keeping track of what's a 30-day time frame on that payment, okay? So that's very important, okay? The second component is related to amounts owed. Now this is one where people often screw it up, okay? The reason I say that is, this is how much of your credit card you're using. So if you max out your credit cards, it will negatively impact your credit score. It's just a given fact, okay? If you have a balance, let's say you have a credit line of $10,000 and you have $9,000 of it being used by the time your statement ends, guess what? It's going to negatively impact your credit report. Now, you notice I said by the time your statement ends. That's key because they only report based on when your statement date is at, okay? So every time your statement date ends for credit cards, that's what they report to the credit bureaus. If you haven't noticed that in the past, I'm telling you right now, that's key. So you always want to make sure that by your statement date, your balances are below a certain percentage in order to keep your credit score as high as possible. Now, the rule of thumb that's kind of out there is you want to use no more than maybe 10 to 30% of your available credit by the time your statement ends, okay? So during the month, you could use a little bit more or less depending on what you want to do, but just make sure that by the time your statement ends, you make a payment or something to that extent to get that lowered to make sure that your credit score is remaining as high as possible. So that's kind of the rule of thumb that I hear most commonly out there, 10 to 30%. Anything over 50% is a bigger hit to your credit report, okay? Anything, as long as you stay below 50% of using your credit cards, then you likely won't have a super huge negative hit to your credit report. But in that 10 to 30% range is going to be a lot better for you, okay? So those are just some little tips and tricks that I kind of put together over my years of experience kind of dealing with this. And so you see the other things that are important, 15% length of credit history, not that important, 15%, even if you had a little credit history, as long as you get these two things right here, you should still have a decent score, okay? New credit, how often are you applying for credit? So this is where people say, well, I don't want to apply for credit because it's going to ding my credit report and decrease my score. Well, look at this. It's only 10% of your score, okay? Not a significant impact on your overall score just by applying for one or two cards. And also another secret or key there is if you apply for multiple cards within like a 30-day period, they all count as basically one inquiry on your credit report. So after about 2 to 3 weeks, you'll notice that even though your score might go down slightly, it's going to go and shoot back up, okay? Credit mix, what that means is having mortgages, having auto loans, having credit cards. They don't like retail cards, believe it or not. So try to stay away from retail credit cards because they don't really like those because they're pretty easy to get. And so they don't really value those as much as they do some of the other cards. And also shows typically that you're spending credit on stuff that really is not essential in most cases. So there are differing views on why retail credit cards are so negatively viewed, but they do, kind of hurt you from that perspective, having, too many retail cards on your account. So better to have just a standard credit card, okay? But yeah, so that's basically what makes up your credit score. Pretty interesting. If you've never seen this little diagram before, this is a very interesting diagram. It's very accurate, very true. And the longer you have your credit history, the better it'll be. The less new credit you have, not only inquiries, but also opening new accounts. So you can do an inquiry and not open the account and it won't ding you quite as much. Whereas if you open that new account and now your credit history is a little bit shorter in span, then that could ultimately negatively impact your score for a period of time. And also just kind of keep in mind, if you do have a missed payment or something like that, over time, that missed payment means less and less and less. And after about 7 years, generally speaking, any negative information on your credit report will generally go away. After 2 years, any inquiries on your credit report generally go away and don't have any impact on your credit. So those are just some things to kind of think about and keep in mind. This also goes down into a little bit further of some details on exactly what's going on. And you can click on all these amounts and get more and more information. Okay, so length, more amounts owed. Here's all the different things that go into that determination, right? And so those are things that you can use to educate yourself or refresh your memory on what makes up a credit score, what's the value of it, etc., and all that good stuff. So, and there's three major credit bureaus, if you didn't know, okay? Equifax, Experian, and TransUnion, okay? So, and here's the information to contact each of those. So this is what I highly recommend. Go to this myfico.com website if you haven't already. Get used to it. Learn a little bit about what that credit score is made up of. Again, it's very important to your overall lifestyle, not only just for credit cards, but also just for homes, apartments. More and more people are looking at credit scores as a way to judge whether you're going to be a good person to do business with and other things. So it's just a lot of really important tools here. You want to make sure you keep your credit score on the up and up. Okay. And so, what's a good credit score? Let's see if we have something here that will show us what a good credit score is. Generally speaking, anything that's kind of above a 620, from what I understand, is pretty decent. You generally will be, oh, here we go. Okay, you'll generally be able to get some decent stuff going. Anything that's below a 580 is not so great. So here's kind of the ranges. So 580 to 669 is fair. You'll generally be approved for some loans. You might have higher interest rates, but you're generally going to be approved. 670 to 739 is really is good. It's average. Okay, most lenders are going to potentially approve you. Again, you might have a slightly higher rate, but nothing too drastic, like maybe if you're in the fair or the poor category. And then very good, 740 to 799. So you generally are going to get approved as long as you have other information to, kind of support your loan, whether it's income or job history, etc. Generally, if you're in the score range, you shouldn't have any problem getting approved for a loan or a credit card or anything like that. Okay, there are obviously always going to be the exception to that rule, but generally speaking, in the 800, that's like the creme de la creme. So those are overachievers. And so, yeah, so those are the people who, like I said, are using probably less than 10 to 15% of their credit score or of their available credit on their credit cards. They don't really open too many new accounts. They don't have a whole lot of inquiries. They have a long credit history, probably 15 to 20 years. So to get to this level, you really have to kind of have a very long, history of good payment history and everything like that. So don't feel bad if you're not here. If you're anywhere in the good or the very good categories, I think you're right on point. You're doing well. If you're in the fair or the poor, definitely something to strive for, trying to get to this good category. Because if you get to that level, you should have no problem getting a mortgage. You should have no problem getting an auto loan, etc. As long as your income and other things that go into those factors are working for you. But just keep in mind, the credit score is just one component that a lender is going to look at. They look at other things as well, like your job history, your living history, your income, etc. Those are all important factors as well, but just something to kind of think about and consider. So anywho, that is the video for today. Thank you for listening. Hopefully you learned something awesome or you got a little bit of a refresher. Please share this with others that you think might benefit from this as well. This is very important information. I mean, everyone needs to understand how the credit score is calculated. And so, this is a great free resource where you can go there, read up on some stuff, and also look at some videos. As you can see right here, they have a couple videos where you can kind of go through and look through that as well and kind of learn some more about it. So by all means, let me know if you have any questions or thoughts or comments. And we will talk to you later. Hope everybody has a good day. Bye.